special and maiden interaction with ET now. The new boss at Indusind Bank, Sumant Katpalia, joined in this morning to walk us through the Q3 numbers and talk about the latest trends in the banking sector post-budget. Of course, he did all of this with none other than our managing editor, Nikunj Dalmia. Now, based on the budget, he said that it was a very growth-oriented budget and there was no worry about expanding the fiscal deficit, which he liked. He said that in his view, if healthcare and infrastructure spending is going to pick up, there's no stopping the economic rebound. Growth will be led by increased consumption, and as a result, previously stagnant sectors like corporate banking may suddenly show a sharp turnaround. Now, in terms of what's happening at Indusind Bank with the asset quality, the retail slippage, which was absent in Q1 and Q2, has crept in slightly in Q3, but again, it's not worrisome. There might be minor slippages in Q4, but they will be moderate. Corporate book is now stabilized and asset quality, in his view, has bottomed out. And the perception of Indusind was that they were not taking NPAs and providing for them. He seems to now have shared the view that NPAs are being fully provided for and actively recognized, and that even in the worst of times, Indusind Bank's GNPA has been in the top 3 within the industry. So, according to him, the worst of asset quality is behind us. Now, in domain expertise, which is where Indusind specializes, 49% of all business lies within their domain expertise of A, vehicle finance, B, microfinance, and they're looking at 2 new domains right now of wealth management and housing. And their whole strategy is they like to be in the top 3 wherever they go. So, for example, in vehicle finance, they have a 30-year legacy. In microfinance, they have an 18-year legacy. The microfinance book is a 20,000 crore book, which has a 20% yield nearly. So it's very profitable. The 2 new domains are also looking quite promising. They're also recently picking up heavily in rural. They want to be a rural bank. Tractor financing is growing very quick. They're again in the top 3. They want 7 to 8% market share, and they see that happening in the middle to near to middle term. Corporate exposures will become more granular going forward, so none of those bulky exposures, which is one of the reasons why Indusind fell. And on the deposit side, no bulky deposits as well. They're granularizing both their assets and liabilities, and that's going to make the ship more steady, so to speak, and reduce the reliance on any one account, whether it be on the liability or the asset side. In terms of some pockets of stress, obviously in West Bengal and Assam, collection efficiency is back at 95%, so no real concerns there. That seems to be turning around quite sharply. And the outlook on ROAs and PPOP growth from here on out looks very strong. Margins of PPOP are 5.78% today, very healthy. CASA should be range bound within 40 to 42% before it makes its next big jump. And cost of deposits coming down will also help overall profitability. Promoters, finally, as a vote of confidence, will be infusing the money by no later than February 18th. 2,000 crore should come in at a price of 1,709 rupees per share, really bolstering confidence that the promoters have in the bank management. So, Indusind Bank, one of the top performers in the Nifty today, post this interview, been a sharp knee-jerk reaction while the management was on air, and the outlook from here only seems to be looking up.